Hi and welcome to this Blueberry Markets video update with me, John Kibler, head currency analyst. In this video we're going to be talking all about the US dollar ahead of the FOMC meeting this evening. Now, the the FOMC, this is a big event. Let me just delete this Fibonacci for a second. This is a massive event this evening, and basically the market is almost pricing in the fact that the Fed are going to be a little bit dovish. The reason being is what's happening is inflation is falling. Okay, so typically when inflation falls, then the Fed have to do something in terms of potentially cutting interest rates to bring inflation back up. Okay, now that is pretty much being priced in at the moment because the inflationary data has been falling, which we have discussed over the past few weeks. What's interesting is how dovish are they going to be? Okay, now if they talk about any future rate cuts, so if they say this evening something along the lines of, we're expecting further cuts in the future, or by the end of 2019 we're expecting 2 more rate cuts, then the dollar is going to drop. It's going to break this trend line support. It's going to head all the way down into this $96 level. Okay, however, because the US dollar decision to cut interest rates has been priced in, if they are less dovish and suggest that it's not as bad as what the market is making it out to be, and the fact that the likelihood of a further rate cut is highly unlikely, then we could expect the US dollar to bounce quite significantly and potentially head towards 98.30, or even breaking out and heading towards 99. Now, I know this is a little bit like, well, this is just all if buts and maybes. Price may go up, price may go down, but that is just the fact of this meeting. It's actually probably one of the most crucial ones that we will see potentially this year out of the Fed. So what we suggest is waiting for the dust to settle. Don't trade that news event, is pretty big. Wait for the dust to settle and then apply your trading ideas, because if the dollar does drop significantly, and does break past this trendline support, then we know that we're looking for that short continuation into the 95.50 area, or at least into the 96 sort of area. These structure lows down in here. However, the markets are already starting to sell off, and the reason why I've left this video so late is typically a market will start to sell off before seeing any kind of boost to the upside, or vice versa. And it's interesting to see that through the US session, it's been relatively quiet, but the US is starting to fall. Our safe havens are starting to get a little bit bid up as well, which is very interesting going in to this interest rate decision. Obviously, the Fed are going to hold rates at 2.5%, but it's what are they going to do next? Okay, so be aware that those are the two outcomes that could happen. Watch out for that language in the tone from Fed Chair Powell. If he discusses any future rate cuts, then the dollar is going to continue to fall. Technically, it's setting up for a short. If we look at this, we've got this key level around about 97.60. The market is still holding at that level. We discussed that the other day. I was expecting maybe a little bit more downside before seeing the interest rate decision come into play, but we're still hovering at this key turning point. So anything could happen at this moment in time. Be prepared for both outcomes. Be safe with your trading, and hopefully we get some trend direction from the US dollar. So thanks for watching this video update. It's been John Kibler, head currency analyst at Blueberry Markets. Speak to you soon.